afternoon, everyone, and welcome to the market close report for Wednesday, the 11th of February. Well, the Aussie market had an absolute cracker today. The ASX 200 actually surged by 147 points. That's a gain of close to 1.7% to 9,014 points. So that means, yes, we've risen above that 9,000 point mark for the first time in 3.5 months. We also finished at the best levels of the session, which shows some enthusiasm in the buying today. And it also means that we are closing in on that elusive record high. So we haven't breached that since October last year, and we are just 100 points or around 1.1% away. So it is quite common for the market to face a bit of resistance as we get closer to these big psychological levels, 9,000 points included. So the fact that we've closed above that level is something to note, but also when we get closer to those record highs, markets can get cold feet. So it's just something to be mindful of. Across the market today, actually 70% of stocks managed to improve today. So quite widespread improvements across the sectors. But the real reason why our market managed to do so well was that some of the larger stocks on our market really shot the lights out. And it was really just a reminder of how important the profit reporting season is each February and August, because many of the big movers were companies that handed down their results, some better than expected and others fell short of what the market was hoping for. Also, as far as sectors go, we had really the banks and the miners, or the financials and materials, rising quite strongly. And when that happens, the ASX 200 tends to go with it. So the financials 3.5% higher, the materials up 2.1%. So those two sectors combined account for close to 60% of the entire market. So very much top heavy as far as those two sectors go. But we also had improvements coming through from utilities, which is one of the smaller sectors, up 2.5%. We also had industrials, consumer discretionary, tech and others improving. The big losers today included healthcare. We had a stock there out with earnings, which we'll get to in a sec. And then real estate and energy didn't do so well either. So let's take a look at some of the winners on the market today. Commonwealth Bank was the biggest boost to the ASX 200 index. In fact, just on its own, it added about 60 points to the ASX 200. So it made a pretty big difference. Once again, creating a bit of distance between it and BHP as the largest stock on the market. Now, it was also a catalyst for improvements across the other banks today. CBA actually came out with its half-year results, which came in above what the market was expecting. First half cash profit up 6% to about $5.4 billion. There's been some growth in lending and deposits, and this is despite a lift in expenses, investment in technology, a dip in margins, and plenty of competition. It also raised its interim dividend by 4% on the same time last year to $2.35 per share. Now, reminder that over the next 2 days, we've got ANZ and Westpac coming out with quarterly results, but it's really, we've got to wait until the first week of May to get half-year numbers from the other major banks. So this was seen as a bit of a catalyst for improvements across the other banks ahead of this. We also had James Hardie today lifting by close to 11%. The building products maker delivered a 30% lift in quarterly sales, helped in part by a recent acquisition. AGL also up by close to 12% today, hitting a 6-month high. It actually beat consensus with its profits and also its dividend today. And Aussie Broadband was up almost 15% today. Now, it actually signed a deal with AGL. It's essentially just bought its telco business. So it's adding about 350,000 broadband and mobile connections, and it expects this deal to be wrapped up by June. There were losers on the market though today. The worst was ResMed, which was down 4.7%. The reason for the decline was that it's trading ex-dividend today for around a 6-cent div, which it's paying out next month. CSL was a big weight on the market, falling by close to 5%. Now, it's had a wild ride for the last couple of days. Yesterday, right at the close, there was the surprise announcement that the CEO, Paul McKenzie, is resigning effective immediately. A reminder that CSL shares have basically halved in value since peaking in 2020, so that makes things difficult. But today, CSL handed down its half-year results. It had a dip in half-year revenue, a fall in underlying profits, and when you include one-offs like restructuring costs and impairments, profits actually fell by around 81%. Computershare also down by about 3.1%. The share registry company handed down its results. The market unimpressed despite a lift in revenues, profits and dividend. And the ASX also down 1.7%. The market operator was hit by the CEO announcing her resignation last night. Obviously, the group has faced a number of challenges, operational incidents amongst others in recent times. Now, if we look at currencies, the Aussie dollar buys around 71.1 US cents. It also strengthened against the euro, but fell a little against the Japanese yen. Now, looking forward to tonight, we do have a key update on US jobs growth. This is delayed data that was meant to be out last Friday, but because of the partial US government shutdown was pushed back by 5 days. So that's going to get plenty of attention. We've also got the likes of McDonald's, Shopify, Kraft and Cisco out with the results. And tomorrow we're going to get another raft of earnings. ANZ out with the quarterly. It will get some attention, but we've got others like AMP, Northern Star, IAG and many, many others as well. On that note, have a great evening, everyone, and we'll chat to you tomorrow.